Welcome back to the Finding Idaho podcast. Finding Idaho is a division of Realty One Group professionals in Boise, Idaho, and we cover the greater Boise area's real estate market. We like to promote small businesses and share about Idaho life in general. Today we are sitting here with Paul Cubbison. He is the owner of PACFI. We are going to get to him in just a little bit, but I wanted to just kind of share some market stats with you guys, just like we had talked about last week that we were going to do. So as of March 2022 for Ada County, now these are single-family existing and new construction, but our sold units for the month of March was 794 in Ada County. Median sold price, $561,707. Average days on market was 17. So you compare that to February of 2022, so just a month prior to, we had 632 sold units, quite a bit less. A median sold price of $544,490. And average days on market was actually a whopping 29. We had a little bit of a lull there, and for a little bit in February and even March, I was kind of feeling like we were slowing down a little bit, but the numbers are kind of showing that we slowed down and then picked right back into it. So comparing March's numbers with the year before in 2021, where we had 879 sold units, a median sold price of $460,000. So that's up $100,000 year over year. And average days on market last year for March were 16. So we're right about the same thing at 17 now. Looking over at Canyon County, March, we had 491 sold units this last month. 437,595 for a median sold price, and average days on market was 21. So comparing that to 2022, February, month before, we had 407 sold units, median sold price of 420,909, and average days on market again was 35. So Canyon and Ada counties both, we had a pretty slow time there, January, February, kind of getting going into the year. Of course, those are historically pretty slow months anyway in the winter, right? So some of that was stuff that was residual from the end of last year. But comparing March for 2021 of last year, in Canyon County, we had 447 sold units, 371,860 for a median sold price. So it didn't go up quite as much as Ada County did, but still a pretty significant jump year over year. And average days on market in Canyon County, for whatever reason, last year was only 9. So that's a significant increase there. If we look at just the most recent 2 weeks in March here, I like to look at kind of more the MLS as a whole of what's going on, at least in Ada and Canyon counties for the entire everything that can be listed on the MLS. So we're talking not just single family, but we've got townhouses and apartment complexes and condos and even mobile home units. But everything that was listed in March, the week of April 3rd. The new listings we got that week was 441 total, and we had 383 total pendings. So pending means that something went under contract during that week. So you can see we had, and prior to that, we had an increased amount of activity or of new listings, and then we had a decrease in how many went under contract. So we were kind of seeing those separate just a little bit. The week of April 10th, we had 411 new listings hit the market, and 399 actually went under contract. Not of the ones that went listed, but in totality of what was on the market, there were 399 that went pending during that week. So we can see that gap was kind of spread out, and it's starting to close back in again, which would kind of indicate what we were seeing in that slowdown, and now it's seeming like it's picking up, but we will keep an eye on that. Of course, if you guys want any more detailed information, don't hesitate to reach out if you're looking for Gem County, Payette County, anything else that's in the Treasure Valley here. I'm happy to get those numbers for you. But again, those numbers are specifically to Ada and Canyon County here. So, okay, getting into our guest here, we've got Paul Cubbison with us.
Thank you, Andy.
So, Paul, I met you a few years back, I think. But tell us a little bit about what you're doing here, where you're from, how long have you lived here in Idaho, and kind of what brought you guys here.
Yeah, absolutely, Andy. First, I want to say thank you for having me on your podcast.
Absolutely.
Always a pleasure to get together and work together.
I like to hang out with you, too.
Yes,
So.
definitely. So originally, I'm from California. We moved here in 2020 from San Diego. And one of the biggest motivating factors to get us up here to Idaho was spending more time with our family.
Right.
We really enjoy the outdoors, anything that has to do with just spending time fishing, camping, family time.
Right.
And getting up here was one of the driving factors for us to be able to do that.
There's definitely a lot of those things here.
Yes, absolutely. We love it, and haven't looked back.
Nice. Actually, we are going to be having some people. I was talking to some about coming on to kind of talk about camping and fishing and hiking and hot springs and just kind of exploring Idaho too. So that will be coming to the podcast, here soon too. So
Nice.
Little teaser.
Nice.
So 2020, it feels like you've been here a lot longer than that in my mind.
Yeah.
But it's only 2020. Okay.
Yeah. Only a couple of years, approaching our 2-year mark here.
Nice.
Next month, actually.
Oh, that's good. That's exciting.
Yes.
So you have a family. Tell us a little bit about that.
So yeah, my wife Ashlyn and I, we have 2 boys, Sesh and Shane. They're 8 and 10.
Nice.
And just 2 little bundles of joy. Keep us busy.
Oh, yes. Definitely keep you busy. But and how long have you guys been married then?
We've been married since 2011.
Nice.
Yeah.
So 11 years coming up on at least.
Yep.
Good. Okay, so tell us a little bit about your past experiences. I know, because we've had a lot of these conversations and stuff, that you and your wife both have a very entrepreneurial mindset. Tell us a little bit about that and kind of your experiences there in the past.
Yeah, absolutely. So it kind of all started back in 2003. That's when I got into the mortgage business.
Uh-huh.
Started as a loan officer at a local brokerage. I would say it's probably been in my DNA, though. My dad has been a broker for 35 years.
Nice.
And I've just been, learning from him, just growing up and just seeing everything he does. It kind of just resonated with me, and that kind of was instilled in me.
Mm-hmm.
I fell in love with the industry. From there, I switched over to the wholesale side in 2006 and worked for a wholesale brokerage called Aegis Wholesale,
Mm-hmm.
where I would actually call on shops. That's where I met my wife.
Nice.
Calling on a brokerage. Yeah, so that was pretty cool.
Worked out pretty well then.
Yeah, it definitely did. Yep. Yeah, so I owe a lot to the mortgage business.
There you go. Yeah, exactly.
But then I'd say about a year from there, when the market started to go bad, it was just seemed like overnight. We got a phone call and boom, doors shut. No longer have a job.
Mm.
And that was kind of a turning point in my life. 2008 was when the market crashed, and I just did not want to have that, fear again of working for someone
Sure.
or a company where that could happen again. And that's where the entrepreneurial spirit kicked in.
Mm-hmm.
My wife and I, we started an online company along with a pool company, and we actually built that company from the ground up together while we were dating.
Mm-hmm.
And then as the market started to get a little better, I started to, get back into the swing of things with working through my dad, since he's a broker.
Mm-hmm.
I hung my license with him, worked with him, and fast forward, a little bit from there, decided to get my own brokerage license and start my own company. And that's kind of
Nice.
where I'm at right now.
Awesome. Wonderful. So, as of right now, is PACFI the only business that you have, or are you running anything else?
Yep, no, I still own the pool company that's being managed and ran in California.
Mm-hmm. Turns out pools are more prevalent in California.
Yeah, there's a few of them out there. So yeah, that's still going, full speed out there. And then I also now manage the brokerage that I have here, doing loans in Idaho and California.
Okay.
Yeah.
Nice. You obviously still have quite a bit of connection to California. We won't hold that against you, by the way, but
part of it's still there. Yeah.
I always find myself telling people, we totally understand why people want to be here. It's a great place to raise your family, and obviously we love being here and raising our kids here. But I always just am telling my clients moving up from California, just don't forget why you wanted to come here.
Yep.
Don't mess this up for us.
Exactly. There's a reason you moved.
Exactly.
And don't forget that.
And it's but I found that that's a pretty common story, too. So okay, so PACFI is now your mortgage lending business.
Correct.
Does PACFI stand for anything?
PAC Financial.
Okay.
Yep. Yeah, essentially, PAC part of it is Paul and Cubbison.
Nice.
Our initials put together.
Okay.
And PACFI for short. Yeah.
Okay, I like it.
Yes.
Okay.
Yeah, that's a great question, Andy. Many people don't know the difference between a bank, direct lender, or a mortgage broker. The difference between a mortgage broker like myself is I solely deal with mortgages. I have the top wholesale lenders in the nation to be able to shop the loan through all of them and find the best program for my client. That's kind of key versus a bank, whereas they have checking, savings, auto loans, also do loans as well for homes. They don't specialize in that, and they only have a small box that they have to fit you in specifically for their program. Along with they have higher fees and generally higher rates. Whenever I have a client that comes to me that has been shopped elsewhere, whether it's a local credit union or a bank, 9 times out of 10 I'm beating their rate and their fees. Direct lenders, on the other hand, they are also mortgage brokers like myself. However, they work for a specific lender only. They don't have a book of lenders, whereas myself, I have a whole list of wholesale lenders that we shop through.
So you would have some different options potentially,
Yes.
if it was outside of the norm.
Correct. Yep. And that's kind of the beauty of it. I'm kind of a competitive guy. It's in my nature, and I don't like to lose a deal. And when I was first getting the business and seeing that you have to either do one side or the other, I decided to go the brokerage side where I have the options to shop it and be able to find out what I can do for my clients. Yeah.
Right. Love it. So you have obviously a lot of different options there. There can be, useful for a myriad of things. You and I have obviously worked together a few times. For those of you in the audience, I actually was blessed to be able to help Paul and Ashlyn buy their house when they moved here. So that's how I got to know them in the first place, and have we became friends pretty much instantly. In fact, I think Ashlyn was a little irritated with us sometimes when we were looking at houses because we were having more fun than we probably should have. But
Yes.
but it was awesome, and I've really enjoyed that. But on the lending side, I've really appreciated your ability to just work with a lot of different scenarios and different options. There's been times where I have come to you and even asked for stuff that was just really way outside of the box. And generally you have options for those. I mean, when we're talking about, something that is a non-conforming loan is what we talk about in the industry. So talk about what the difference is then with a conforming loan and a non-conforming loan. Is there a major variance there?
Yeah, so that's a good question. The differences between conforming and non-conforming basically are conforming would be your standard loan that would fit into the standard box of your standard bank. We offer those rates and programs in addition to non-conforming or non-QM, which would be your jumbo loans, your bank statement loans, self-employed loans, all sorts of different programs. And we also have a very interesting investment program called a DSCR program that is pretty interesting to help investors as well. And anybody has questions about that, you can reach out to me. It's pretty fascinating.
Nice. Good. Yeah, there's definitely some wonderful stuff out there. And, I am always telling people, look, if you have any questions or if you maybe think that you are not able to buy a house, don't ever hesitate to reach out to myself or to a lender. Any realtor is going to hook you up with a lender. But one of the things that gets we hear a lot of times is that people don't realize what options they may have because they think we've heard, let's say you mentioned self-employment, we hear that you have to have 2 years worth of income and all of these things, and while that's absolutely true for a conforming loan, there's options out there for other things, and you may pay a little higher interest rate in that case because there's a higher risk to the one that's actually lending the money. But there's options, and so that's what I'm always telling people: reach out and ask, and talk to us. Paul and I both are pretty low pressure guys, and that's one of the things I've really appreciated about you is, we both kind of run our businesses that way where we're excited and ready to help,
Yep.
but I'm not ever pushing on
Exactly.
people, and I think most of my clients have appreciated that. I think about both of us when we're working together too. So
Definitely.
okay, so what common questions or misconceptions do you get from buyers? And a lot of times those typically come from first-time home buyers, but I think also the ones that I've worked with some people that haven't bought a house for 30 or 40 years, and so they're very much not first time, but they act like it in a lot of cases because things are different than they were in the 90s or the 80s, right?
Oh, yeah, absolutely. Yeah, definitely. Yeah, so the most common misconception is going to be, do I have to pay an origination fee? Although that's how it was back in the day, as you would see, upfront points that you're being charged for an origination fee, the lender pays me now. So it's called a lender paid transaction, and you're not going to have to pay for my services directly, which saves the client money and less closing costs. So the most common question I get too from agents is, how quickly can I close?
Of course.
Or clients, yeah, they want to know, how quickly can we get to the funding table? And being pretty competitive, like I said earlier, and having everything in order, I like to try to close pretty quickly. We're looking at 17 days or less.
Nice.
Usually we're waiting because the seller doesn't want to do it too soon. They've got to move or whatnot. So
Right.
I'm usually waiting to close.
Yep, that sounds about right.
Yep.
A lot of times we're pushing on one end or the other.
Yep.
Or the other thing, that I know has been a struggle, right now for a lot of agents is getting the appraisal.
Yeah.
And so sometimes we're waiting on that appraiser.
Yep.
Do you have any tricks for getting the appraisal done faster?
Yeah.
Obviously, it's out of your hands in a lot of cases. But
Yep. Yeah, correct. It's definitely out of my hands in the sense that I can't get the appraiser out there and to get him to do the inspection. But the biggest thing I can do is the moment we have a accepted offer, I am ordering that appraisal same day. I'm not waiting, a couple days or dragging my feet to get that order in to the
Right.
AMC. So the quicker I can get that in and get it assigned an appraiser, the better.
Yes. Okay, so what would you tell first-time home buyers right now? I know I have a lot of conversations with them, and they get pretty discouraged.
Yep.
And sometimes it's hard to be the bearer of bad news. And some cases, and sometimes they just can't obviously buy a house right now because they're the numbers don't work for them. But anybody that is in those FHA loan programs, the ones for those of you that don't know. That's typically the most commonly used one for a first-time home buyer, right? What would you tell them to encourage them, or what tips would you give them?
Yeah, so the biggest tip I would say is make sure you're working with a brokerage like myself that can do TBD approvals, where you can actually have your file underwritten and approved before you even having an address and an accepted offer. That way, when you're making offers, you already have some more power to go up against any cash offers, knowing that you've been underwritten and have a stamped approval by the underwriter.
Nice.
Second would be rates are going up. That's not changing, and that's not stopping. What I would recommend is getting, again, with a brokerage like myself that has the option of doing what's called lock and shop, where we can actually lock your rate as of today's pricing, and that's good for, about 120 days or so, depending on how long we want to lock it for. And you can go shop and know that you have your rate secured.
Absolutely.
Yeah, just last week pricing is dramatically different from this week, and it's going to continue to go up.
Sure. Okay, so let's talk interest rates then. You brought up interest rates. Where are they at right now? Where do you think that they're headed? And, it sounds like they're going to continue going up, and everyone I hear about, goes up. But I know, go ahead.
Yeah, so we've definitely had some dramatic jumps, in the last few months with the rates rising. The Fed is not, being gingerly about it at all. They first off were coming, saying that they were going to raise rates slowly and introduce maybe 2 or 3 rate hikes throughout this year. And has changed now since there's about 6 more times they want to raise them in 2022.
Wow.
Yeah, so rates are going to be continuing to climb. But on a positive note, although they are rising, they are definitely lower than what they were, years ago when they were in 11s or 12s. We've seen some scary high rates before.
Right.
This is more so that would be my dad's time frame. But we're not there yet, which is good.
Sure.
Yeah.
Yeah, absolutely. Though, even though those interest rates are rising, though, rent has been rising a lot too. I mean, we keep hearing about people that are being priced out of the rental market and having a hard time there. So what do you think about that as far as, again, these first-time home buyers are concerned? Talk to us a little bit about that.
Yeah, no, absolutely. So anybody that's currently renting right now, as you know, 100% of your rent is going to someone else's mortgage. It's paying down their principal balance and giving them equity. It's essentially 100% interest rate if you want to think about it like that. So whether rates are going into the 5s or whatnot, you would be owning your own home, paying down your own principal, building your own equity.
Right.
So these rates we're at right now compared to renting is a no-brainer to buy.
Sure.
And be able to own your own tangible home.
Nice. So, I guess that would, for me, I would want to go back to what we were talking about earlier is just make sure you come and talk to somebody. If you are renting, if you think you might even have a chance, don't be shy about that, because we love to help, and we want to have those conversations as early as possible. Because as Paul was saying, it's those rates are going to continue to increase. I'm not seeing any slowdown now in the market. In fact, it's just picking up speed. And so, talk to people. Don't be afraid to just, at least start that ball rolling and that conversation. And if we can lock in rates, if there's something that's, doable for you, we'll do that. So anyway, Paul, it was great having you on. Appreciate your feedback. Paul Cubbison will have his information here down below as well. But can you throw out your number and or a way for them to get a hold of you?
Yeah, absolutely.
Email or phone or both?
Yeah, definitely. Yeah, you can call me directly on my cell. It's 208-807-0370. And my email would be paul@pacfi.com.
Nice. Okay.
Definitely. Awesome.
All right, man. Well, thank you. And thank you all for tuning in. Don't be afraid to subscribe to. We'll have more information coming up in future podcasts about life in Idaho, some small businesses around here, and particularly as things relate to the real estate market. We will continue to do updates on the market about once a month at the beginning of the month. We'll put those out there for you so you've got current numbers, but don't ever hesitate to reach out and we'll get more to you. So thank you guys and have a great rest of your day.